Hello traders, Gary Wagner here. It's approximately 12 noon in Honolulu, Hawaii. It is Friday the 19th day of August, and this is the daily report for gold, our weekend review. Traders, what a week we have had in the market. Market is currently trading up significantly, about $28 higher, and you have 1853. That would be the ask bid is 1851. That is vis-a-vis the cash market. On today's report, I will look to cover three basic topics. One, we will look to recap the week in terms of strategy and what we actually saw in terms of price activity in the market. Two, we will go over trades that we executed. And three, most importantly, we'll talk about what I am currently looking for the next week ahead. All here on today's weekend review. Traders, wanted to spend our first few moments together kind of recapping the week itself and kind of breaking it down because it was absolutely an exceptional week. Let me go ahead and blow this up for us just a little bit. What you can see is on Monday's trading activity, that's the 15th, you can see that in terms of the marketplace itself, we're looking at about 1741 in terms of price action. Now, I brought out a new chart. This is the December contract of COMEX and Globex Gold. We'll be using this and interchanging this with our spot market. Had a nice rise, and by Tuesday, as you can see, as we follow that up, it was able to have significant gains, about 1767. It continues its rise on Wednesday, trading up to about 1785. You can see that it hit an interim top right up here, 1793. It came down a bit, but as we went into the overnight trading session, Wednesday to Thursday, you can see that the market begins to move up, and we actually got this 93 print. This is now a double top when we look at it, and that was the last we were going to see of $1,700 gold. I know it's hard to believe, but we've seen such an incredible move this week. From Thursday to Friday, though, and then Friday to the close, were probably some of the most exciting trading times I've ever seen. And I have been in this markets on and off for about 30 years. So this was one exciting week for us. I'm glad I'm not a real strong equities trader because they had a brutal week. But as you can see, 1793 moves up. It tests 18. But here's what's interesting. In the past, when we've seen the market test 1800, it's popped just straight down. We had the high, went to 1809, then came back down. But as you can see, this market went basically straight up to about 1822. At 1822, it formed a little bit of a top at 24. It came down, and on Friday's trading activity, we saw the market basically pop from 1820 all the way up to our new record high, 1865. This is basis most active December, and it's closed just off of those lows at 1851. Really, the next topic I want to cover before we get to what I consider the most exciting part, which is what we think will happen next week, is really to recap the trades of the week. And it was just a phenomenal week. Now realize this is moving on the back of just an exceptional set of trades that we did just prior or the week before. And I'm going to break it down to you in this way. In essence, when we take a look at the market and in terms of straight dates, on the 15th, we took an initial position, and the initial position that we took was 1763. And this is what I find really interesting. I also want to show you what led to those decisions and how that process itself was actually made. The first thing is, as this market came up, I want you to realize you've got this classic three-river evening star right in here. You've got the green candle, a perfect doji cross. This is, of course, a half-day chart, 720 minutes. Market comes down, you get an engulfing bullish. The engulfing bullish was confirmed. That was my first indication. And what I was looking for is that when we had this strong confirmation here, that is what gave me the initiative to actually issue our first buy signal, and as I said, that was gotten right around 1763. Now, as the market came up, my belief was that we had an area of pretty critical resistance, this last top right in here. And so when I saw the market effectively moving to that point and begin to break above that, that is what initiated the second buy. So when we look at it, we entered right in here. This was our first trigger. Our second trigger was right in here because my sentiment was that if the market would in fact move above here, that we would have a pretty significant breakout. Traders, I had no idea what kind of breakout we were going to witness, but the fortunate news is we were long and the market was strong. That's the way we want to play this game. There's no other approach to take. So the market comes up, and as we were watching it, I should say in trading last night, once we saw this top get hit, and realize there's no historical perspective to look at and say last time it was here, it reacted in such a way. As these candles started turning red, my sentiment was that there has been really no round of profit taking. Pretty much anything can happen in the market. So by trailing the stops up, we put our stop at 1840. 1840 in that space is the cash. Now, traders, the good news and the bad news is that, as you can see, the low on this particular candle comes right within inches, but effectively through our stop. So what does that mean? Well, that means we got in at 1763 and got out at 1840. That gave us a total profit of $77. The second, or the add, we got in at 1790. Same thing, out at 1840. That gave us $50. Our total profit on this trade this week was $127 out of the gold market. Now, based on a single contract move, and traders, depending on your risk appetite, you can multiply this by whatever number is comfortable for you, but basically, I look at the margins right now at about $7,500 per contract. My recommendations always have at least $25,000 behind every 100 ounces of gold that you're working with, at minimum. So, based on that, you had about a $15,000 margin. The return was $12,700 for both contracts, or a weekly return of 84.6. I'd like to see a bank give us that kind of return. That is one nice weekly return. And traders, it was just a great ride. It was a very, very nice week in terms of our trades. And traders, that brings us to the final objective of today's program, and that is to touch upon where we believe this market might be headed over this next week to 2 weeks. Now, the first thing is we have to put this all in perspective of what the market's doing in relation to where it's been. And this is what I find absolutely incredible. When we take a look at this market, this is, of course, our longer-term channel lines in which we have our big wave moves. I've taken them out to simply illustrate the kind of breakout, the significant market move that we saw, and that's an absolute straight parabolic linear line up. You can see this market has just been from 1500 to 1850 since July. You've had that kind of a move in the market. Now, with that kind of energy, first of all, anything can happen. But my sentiment is we entered and exited some extremely profitable trades this week. Do I think this market's going higher? Absolutely. Where do I think it's going? I think it's going to 2000 initially. The question is, how will it get to 2000? In other words, there are a couple of roads it could take. It could go to this area here and then back off and then go up, or it could go straight up. That's quite obvious. So what do I think is the higher of the probabilities? And this is what we want to take a look at. And for that, we're going to bring out our major chart in which we track our Elliott wave count, our Fibonacci, and some other things, because that's what puts it in perspective. Traders, you realize that I had some upper level targets, and the upper level target that I had was 1886. And let me show you the chart I was drawing that from. Traders, I am taking this chart. It is, of course, a static chart, and this is from my Kitco article that was done the night of the 15th when we put our first trade on, when I actually looked at the market in terms of the targets that I was looking for it to hit, and also published in my Kitco commentary. My basic assumption was that we had a very strong level of resistance, and that was that 1809, our first initial target, and that was this first top. My sentiment was that if it could break this, I was going to look for it to go to the next Fibonacci level, which is 138, or the 38% multiplier, and so my target was 1886. That is what I believed we had in terms of upside potential. Now, take a look at that, take a look at the market, and now let's take a look at where it went during the week. And when we take a look at that, you can see that in essence what we saw this market do is really trade to a high of 1874 and with a target of 1886, which would put it right here. I believed last night that we got pretty darn close to what I believe we saw in terms of potential. So the fact that we're flat in the marketplace right now is a good thing, because I really want to wait the weekend out. We had an environment of economic uncertainty. The characterization of last week has to be fear and panic within the equities markets, within the global markets, the European crisis, the debt crisis, all the things that you and I have been discussing over the last year and a half on this report seem to have come to a head. But we have to stand back and take a look at it in a simply technical viewpoint, because even markets that are going to go straight up are going to do so in a manner in which they move and correct and move and correct. The reason for bringing that up is that it is critical that you realize that in terms of our Elliott wave count, in our Elliott wave count, we are in 5 of a major 5, and we're at the upper top of where I believe that market could go. Does that mean that I have fundamentally become bearish? Absolutely not. However, market psychology rules market sentiment, and market sentiment moves the markets. The markets move because there's a perception of where it's going to go, not where it is and not where it is going. It's the perception of where it's going to go. And we have all seen markets come down where the pundits out there simply say, well, this is due to profit taking or this or that. They'll put a spin on it. I simply look back and say, it's an Elliott wave, it's a normal cycle. So what are our possibilities? Well, the first possibility in 5 of 5 is, even with 5 of 5, and if I try to do a minor count, I might go 1, 2, 3. So we could even get a 4 and then a 5 to take us up to our target area or above that. That's one of the possibilities. Another possibility is as it hits 5, it has what is called an extension. Now, in an extension, you will get up to a 7 count. So you might see something like this, and the market takes straight off. That's the other possibility. Now, on the bear side, in terms of possibilities, what you want to look at is as follows. As the market moves up, let's assume that it hits 5, we're going to get some sort of an A, B, C correction. Now, I can tell you that our ABC corrections have been mild, but our last ABC correction was fairly long in size. When we take a look at 3 to 4, for example, you get this ABC, so they can be significant or they can be just small blips like right in here, ABC. But you are going to, at the end of a traditional 5th wave, and we are at a 5 of 5, you're going to get some kind of a correction. That correction could even be flat or looked at as a sideways market. The key is that there are many possibilities. However, what we have to be most cognizant of, and what I believe we need to focus on, is that the Elliott wave count right now is 5 of 5. The bullish influences have not changed in the market, but market sentiment will dictate where it goes. Therefore, Monday, we're going to be very cautious. We're going to take a look at this market with an open and objective vantage point. I would like to reposition ourselves to the long side if I believe we're going to have an extension. If we see weakness come into the market, though, we will look for a possibility that this wave 5 and major wave 5 have come to a conclusion and look at the potential for a small correction in the marketplace. This has been Gary Wagner wishing you, as always, good trading. It's been a great week. We certainly got our wish this week. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange